What's going on, everybody? This is Travis, your online trading mentor with Trade with Travis and Carter Cow Capital. This is a Saturday version of being able to take a look at case studies. This case study that I'm going to end up doing is going to end up being based off of the new trading strategy that I have been posting out on my overall social media pages, and being one of the biggest reasons why I end up having the most explosive trading month that I end up having in June over the course of the last few years. So what I want to be able to do is take a deep dive into some of the trades that if I would have took those based off of the pound yen, I would be able to make the same explosive movements that I end up making based off of all of the other pairs that I end up taking a look at when it came down to indices. I end up doing this based off of US 30, end up doing this based off of NAS, I end up doing this based off of German 30, end up doing this based off of XPX. All of them end up showing strong gains over the course of the last month, and being able to go after that. We're having 18% growth in US 30, being able to have 23% growth in NAS 100, and being able to have another 13% growth in what's happening with DAX, which is German 40. So I would love to be able to talk to you about what I end up doing, where I end up getting this from, and how we end up exploiting the overall market when it came down to being able to trade based off of this. So let's go ahead and get started. The first thing that I want you to be able to notice is this. I know I got a lot of stuff on the overall screen, but I think there's one really, well, let me break it down. There's three separate markets when it comes down to trading. There is a trending market where you end up making higher highs and higher lows, and then after that you'll see the market basically end up making this movement in a overall direction once you end up getting that direction. Typically, you don't necessarily see that rocket movement when it comes down to explosive movement, but you end up getting steady gains along the way, and that's the reason why people love trading in trending markets. Then after that, you end up having consolidation. Consolidation is kind of like being on a highway, and then after that seeing a car wreck, and then after that getting stuck inside of that car wreck with other cars, where a whole bunch of cars are basically collected into this one area, and then after that, once you end up passing the overall car wreck, then after that you have a little bit more room to be able to move. However, once you're inside of that area, there's really no way to be able to go. It's really no great possible opportunity. It's the same thing if you end up taking a look at these high volume nodes. High volume nodes is where most of the price action is happening when it comes down to a security, a forex, a cryptocurrency pair, anything when it comes down to the overall market. If you can be able to read the volume, you can be able to spot out the high volume nodes. Now, typically you would say this will be a great area to be able to get into the market. And I will almost refuse that overall statement. I will almost say that you do not want to be able to trade in these areas at all. Why? Because these markets leads to high volumes of consolidation. If you look at that and just say, hey, instead of trading in the areas where we end up having high volume nodes, let's see if we can be able to trade in areas where you end up having unfair market prices, are also known as low volume nodes. Now, low volume nodes, the reason why they're called unfair market prices is because typically when the market is in this area, it typically hurries up and gets out of this area when it comes down to movement, because people are not necessarily trading inside of that area. So the market will end up gravitating and exploding to another high volume node area. Well, that leads us to the area that we can be able to exploit. By being able to exploit the low volume market prices and only entering and exiting when it comes down to the low volume prices in that space, what you can be able to do is get a same amount of pips or points depending on the actual trading pair that you end up pairing, and be able to make that profit in a very short amount of time instead of having to fight with everybody. So think about it like this. I'm going to start here at the bottom. I'm going to use my brush tool. We end up having this low volume node that is right here. If you notice, based off of that low volume node, you end up seeing this consolidation. Now, this consolidation took 3 days of overall movement for it to be able to have that consolidation area and actually be able to break out. However, once it ended up breaking out, if you notice, the market ended up sprinting up 133 points based off of, if you're just being conservative, to going to the next the lowest price of the next high volume node area, or if you're being a little bit more aggressive, you could end up making 185 points and being able to do it in less than 2 days of overall movement. Now, same deal. Market goes up to a high volume node, a high price when it comes down to this area. I'm going to take myself off the screen. you can be able to see that we have this high volume node area right here. We end up having high volume consolidation. The market ended up going about 3 days of overall movement when it came down to consolidation, basically knocking a lot of people out. Knocking a lot of people out, making people lose money when it came down to that trading. All you had to do with this, be patient and look to be able to place in a pending buy or a pending sell order outside of where the high volume nodes end and the low volume nodes actually begin, and then after that routed up to the next high volume node. So the market went from consolidating in 3 days, and then after that exploded up almost 210 pips of overall movement. And if you were being conservative, you could have got at least 130 off of that when it came down to having 2 different orders. Same deal. Market pushed up to a high volume area, pushed up to a no trade area. The market ended up consolidating for a day, and then after that exploded up another 185 pips the next 2 days when it comes down to that movement. Now, you would think that that would just be any type of upside movement that you can be able to trade off of. This market actually ended up creating 843 pips of overall movement that you did not have to fight with a lot of people with, and was able to be able to make it at a very short amount of time. This market started from 525 all the way up to right around 610. So you're talking about almost 2 weeks of overall movement where you could end up making about 843 points, and you probably would have never took a loss based off that movement. Okay, well, let's talk about what happens when the market ends up moving to the downside. If we take a look at that, we can use that same high volume nodes and just use it in reverse. We are basically in an unfair market price. Once the market ends up having a little bit of consolidation up here, the market ended up breaking that consolidation into another unfair market price, fell down to the next high volume area. The market typically gravitates to high volume areas from there. We don't want to trade in those high volume areas. We want to exploit the distance between one high volume node to another high volume node. You end up making 93 pips when it came down to movement right here, fell down into another consolidation zone, did not necessarily give you a consolidation move, ended up giving you a little bit more of a channel. It broke out of that channel to the downside. Once it broke out of that channel to the downside, gave you 175 pips of overall opportunity to the downside again. The market started to consolidate back into this middle area one more time, and just before the market started to push up and keep on making these movements over to this right hand side, it fell all the way back down to this low volume unfair market price, all the way back to where we started at from the beginning. So why am I saying this to you? Because essentially what the market ended up doing was literally giving you a roadmap on where you need to get in and where you need to get out when it came down to overall prices. It really gave you a stair-step area of how to be able to take a look at this market, and it just said consolidation, trade the breakout in the low volume market area. Stay away from high volume nodes, trade in low volume nodes. Stay away from high volume nodes, trade in low volume nodes, and just keep on doing that over and over and over again, and you will capitalize based off of that movement. Now, is this the holy grail of overall trading? No, but you end up making 843 possible pips to the upside and 400 possible pips to the downside, and that's 1,200 overall pips of market possibilities or opportunities to be able to make inside of the market without having to fight anyone when it came down to how the market ended up moving. You got in, you got out of the market, you could have been very confident in allowing the market to be able to move because it gave you a roadmap based off of previous history to tell you that you can be able to make money off of those movements. Now, once again, I always like being able to show different opportunities and how you can be able to create money based off of that. Based off of what we end up doing, same type of volume, same type of different thing. This is German 40. Off of German 40 this month, we end up making over $3,200 alone just based off of those market movements. You end up taking a look at what ended up happening with US 30. US 30, we was able to capitalize on this low volume node area and that low volume node area after the market was in consolidation, staying away from those areas to the amount of right around $5,400 of overall profit on US 30. We end up doing the same thing on NAS 100. You end up having these low profile volumes where the market end up shooting down, and we end up having these pockets where the market end up pushing up that we was able to be able to take advantage of and end up being over $2,200. So the overall aspect and the thought process works in any type of market. You just have to know how to be able to use it to your advantage. We'd love to be able to show you when it comes down to that. All you have to do is just click on the links that I end up having on my social media pages and hop into one of my webinars to be able to go from it. But I think this trading strategy is something that everyone needs to have in their overall toolbox when it comes down to certain trades that you're going to end up taking. This is recession-proof trading. The reason why it's recession-proof trading is because you're using previous history to tell you where the market is going to end up going with almost pinpoint accuracy when it comes down to being able to get out. I love being able to do different case studies and being able to show validity when it comes down to different strategies and ideas. If you want to learn a little bit more about this one, you can go to TradingView and be able to take a look at the overall case study and be able to hop into any other my free webinars and live sessions that we end up having. Like always, make sure that you end up planning your trade. Trade your plan. I see each and every one of y'all in the next video.